Hi, everyone. You're all very welcome to another interview here at the Alpha Capital Group. So today we have one of our first female traders on board. Great to have you on board, Claudia. Good afternoon. How are you, my dear?
Yeah, I'm good. Thank you very much. How are you?
I'm very good. I'm very good. Good afternoon. So I suppose great to have you on board. One of our own Irish traders as well. So it's always great to connect with our
Yeah,
own.
there's not that many of us. It's good to hear an Irish accent.
Yeah, definitely, absolutely. So I suppose for the audience following along, do you want to maybe introduce yourself? Give us a bit about you as a trader.
Yeah, so I found trading in 2018, didn't take it seriously for about 2 years. It wasn't until we went into lockdown and we were sent home from work. I thought, right, I've actually got like 2 to 3 weeks here where I don't have to be in an office. I'm kind of bored because I can't socialize. So that's whenever I started taking it seriously. And yeah, lots of ups and downs since then. Like, it's not an easy journey, but I'm still learning. I'm still trying to kind of fine tune my edge, mental edge, and technical. So yeah, we're
Good.
getting there. Slowly but surely.
Absolutely. And from 2018 to now, you've seen many different types of markets.
Oh yeah. So I've honestly, I think I learned about 10 different strategies before I finalized on the one that I have at the minute. But yeah, I'm not too sure if I regret it or not, like strategy hopping, because I've taken bits and pieces from strategies that I learned before and kind of combined them now. But
Yeah.
definitely a lot of time wasted strategy hopping for sure.
But now you're finding what works for you. So even if there is little bits and pieces from like 3, 4, 5 strategies, you're kind of molding your own that works for you, that you find is obviously successful, which is really that's the holy grail, really, isn't it? So I suppose with that aside, so 2018 to 2023, 5 years in the industry now, what prompted you to join the world of trading?
So I was in my final year of university. I was it was like there was a couple of months left, so I couldn't get a job because no one would hire me just for a few months. So I remember Googling like ways to make money. I was doing all sorts of stuff, like filling out these surveys for 30p each, and then I was trying to study, I think it was two-way betting or something. And then something came up called Bitcoin. I was like, right, what's this? Like, there were stories of these people like flipping their money. I actually had my card details typed in a website by this company that promised to flip like £200 into 1,000. So I was so close to hitting like buy now. And I thought, right, maybe this is a scam website and then I'll have no money to go out drinking with my friends before I come home. So I didn't do it. And looking back now, it was definitely a scam website. But um, I was actually due to fly home like for the last time. I studied in Birmingham and I had this gut feeling to stay a few more days because like our rent, we didn't have to move out of the house for another week. My friends that I lived with were staying there for a bit longer. So I rang my dad, Bank of Dad, and asked, can you lend me £50? Yeah, change my flight. He was like, yeah, take a few days, enjoy yourself while you can. So a couple of hours after that, we went out to one of the girls I lived with. It was like her leaving drinks for work. And there was a guy there and he was wearing like this big, massive, like diamond chain. And I didn't think anything of it. But one of my friends was, how do you pay? How do you afford that? Like, what do you do? And he was saying that he does for this thing called Forex. And I was just asking him, is that Bitcoin? And he said, yeah. I was like, sign me up. So I got started with that company. I was with them for 3 years, but it was very on and off. But yeah, then I left it to kind of do it on my own, find a couple of different other courses, mentorships, and then that's how I've got to where I am now.
Interesting. So you've had quite a journey, absolutely, for sure.
Yeah.
And in terms of your current strategy, how would you classify yourself? Are you higher time frame, lower time frame? I see Trading View in the background there.
Yeah, I'm in a trade at the minute, so I'm trying to like look in the camera to see where it's at.
I love it. So how would you kind of like if you were to say it to someone who's like really new, how would you describe your strategy at this moment in time?
Oh, okay. So I combine a couple of different things, but I'm just trying to transition to the 4 hour time frame because it's so annoying whenever I'm in the 15 minute and like the lower time frames, and maybe I've taken a couple of hits that day, and then I sit back and do my top down analysis the next day, and I'm on the 4 hour, and I'm like, what was I thinking? Like, price action is so clean. Like, why did I enter here when I should have? So I think I'm trying to transition now to more 1 hour, 4 hour. But the strategy I use is is supply and demand. So I'm basically looking for those order block supply and demand zones. The ones on the 4 hour time frame are higher probability. Like, you see price react off them really well. So I'm trying to transition to the higher time frame. But I also incorporate whole level theory, the way
Whole numbers.
price would break and bounce off whole numbers. Yeah.
Yep.
And then also, I think it was Laurie Williams is buy below the open. So I always look at the daily open, New York open, London open, monthly open, and then if prices basically, if there's a bullish directional bias, I'm trying to find a buy below the opens in a demand zone basically, and vice versa for a sell in supply zones. So yeah.
Okay, interesting. Okay, good. Okay. And in terms of that then, so do you look at, so you're obviously a big advocate then, so you mentioned order flow, fair value pricing, I suppose, probably another theory that would probably come in there. Do you look at trend? You're obviously a big advocate for trend analysis, trend directional bias, making sure you're trading with the right side of the directional bias within the markets, I guess.
Yeah, I definitely had a big breakthrough whenever I really knuckled down on expectational order flow. So I definitely incorporate that as well into, you know, just most important thing is figuring out which way the market's trending. Otherwise, you're just, and I think as well, when you try to take counter trend trades, it confuses you as well, because then you're conditioning yourself to look for sales in an uptrending market. So I like, just don't get me wrong, I do impulsively jump into counter trend trades all the time, but I'm trying to be more 4-hour and pro trend.
Okay.
That's my focus for this week. Yeah.
Fair enough. Fair enough. And I suppose within your strategy, what assets are you currently trading at the minute? Because obviously you've got Forex, you've got indices, you've got the likes of gold and oil, commodities. What would be like if you were to trade like the 3 or 4 main assets at the minute, what would be those assets?
So I only trade gold. I spent a full year trading US 30, just US 30. I didn't look at any other ones. And then there was, what was it? I think I was in a challenge, like this was like a year and a half ago, and I didn't have enough margin to enter a trade on gold or something. So I thought, right, what if I could, no, sorry, it wasn't a challenge, it was my personal account. You don't need as much margin for like currency pairs as you do for gold and indices.
Yep.
So I was trying to like compound like a £4 account or something, and I entered a trade on GBP USD, and like it worked. Like it was a good win. I was able to hold it for ages, and I was like, why am I not trading currency pairs more often? So I started incorporating GBP USD, US 30 and gold, and I was finding that I was because GBP USD would move a bit slower than the other two, so I would be in a buy for GU, and it's taking too long, so I would pull myself out of it, go into a buy for gold or US 30. That would hit my stop loss, and I would go back to GU and see that it smashed TP. So I find that I was trying to like juggle, like I know it works for a lot of people, but I find, right, I'm just going to pick one, just going to stick to one. I tried to focus on GU, but I'm a bit too impatient. I like the way gold, like the volatility of it.
Yep.
So I just knuckled down on gold. About 2 months after I done that, I got like a really good payout, got funded with 250k. So I'm now convinced that gold is the one. Okay, and if it's not working for me, I know it's not the market, it's me. So at the minute, I'm just trying to fine tune my mental edge, because I know I've seen the results, right? If I trade properly with right discipline and right mindset on gold, it pays a lot. So I just need to work on myself a bit to get consistent results with it. So yeah, team gold.
Yeah, certainly. And within your strategy, would you look at fundamentals? Do you take volume analysis into consideration?
I just look at Forex Factory. I honestly, fundamentals is something I really want to understand more. I seen one of your videos recently, actually, and you know quite a lot about it, so I'll probably be pestering you with questions shortly. But
certainly,
no, the height of my fundamentals is it a red folder or an orange folder on Forex Factory, and also I would have a glance over Bloomberg as well.
Fair enough. Interesting. Yeah. Okay, brilliant. And I suppose in one sense, it's all about efficiency, and you're talking about your mental edge. And the second thing is then just trying to mitigate any external circumstances that might disrupt the price action, I suppose, or the price action that you're visibly seeing on your charts at the given time, which I think is cool and it's important. So when you talk about the mental edge, which I think is paramount, I think for all traders, how do you handle your emotions? Do you have a set risk management plan or strategy that you kind of adhere to on a daily basis?
I have a pile of rules that I know work, but I struggle to follow them some days. So I'm working on it. At the minute, my main goal is like my good days are like really, really good, but my bad days are really, really bad. So I'm trying to like decrease the variance in between them and find some sort of consistency, because it's just crazy how you can have a few weeks like really good, like on point, you're aligned with yourself, aligned with the market, and one day of F it all. So yeah, it ruins it and you're back to starting point. So I'm really struggling with that at the minute. So I'm reading a couple of different trading psychology books. I signed up for a trading psychology course. It's really good. So I'm working on that. I'm trying to journal a lot more as well. And yeah, I've got an emotional journal and a trading journal now. I'm trying to like really dive deep and figure myself out so I can stop self-sabotaging.
Yeah, I suppose the first point, the fact that you're not even installing in courses, but like the emotional diary and then the trading diary and then the emotional diary, so you can write down your thoughts, your process, how you're feeling in terms of execution. It really is going to be crucial for that longer term development.
Yeah, and when it comes to risk management, I've actually noticed recently that I trade a lot better when I use Magic Keys as the expert advisor on my desktop, because I've obviously got two screens here. So when I've got MT4 desktop up, I've got TradingView on the side, and it always gives me that extra 10 seconds of if I'm going to jump in a buy, I look to the left or to my right. I'm like, wait, you're trading against the trend here. Whenever I'm on my phone, it's so easy for me to just be sitting watching TV and just get a moment of boredom. I'm like, oh, I'll jump on the trade here. Do you know what I mean? So I find that I'm, especially when I just wake up in the morning as well, like it's very easy when you're half asleep, you're not really thinking, you haven't had a coffee yet, you haven't like done any reading your books, meditation or anything, just jumping in a trade. You see markets moved a lot, you're like, right, it's bound to reverse, and you jump in a trade. So I'm going to eliminate the phone trading until I really work on consistent risks, risking the same amount consistently.
Yeah. And being able to take that moment to take a breath before, because I suppose that's the big thing with the markets when they're moving up and down and up and down. It attracts traders into taking positions when really that's the point. You want to take a step back, really, isn't it? And just
exactly.
Reassess.
Especially with gold when it's so volatile as well.
Yeah, absolutely. And I suppose, would you be risking 0.5% per position or per trade? 1%? What would be your general like target or benchmark for your risking?
Yeah, I don't know. I personally prefer, I know that I should be risking 0.5%, but I feel like if I'm risking 0.5%, I need to take more trades. Like I'd rather, what I'm trying to do moving forward now is wait for the like price to reach an extreme where it's taking out external range liquidity, and it's I'm going to be able to minimize my risk anyway, because it's at a point in the market where it's not going to move much further, like hopefully. So I like risking one, because then all you need to do is catch, if you're catching an entry from an extreme and you're catching a 1 to 5, that's 5%. Like apply that to like £1 million account or a hedge fund or something, like that's a lot. So I'm trying to be happier with smaller targets but less trades to achieve it.
And the thing is as well, if you're able to, let's say, go to 2 or 3 different prop firms and compile equity, and like your percentages, when you compound them onto larger scales, it's still the same trade, it's still the same piece of analysis, but when you've got more accounts, you don't necessarily have to take the risks as you might do if it was, let's say, a 25k account singularly, and I think that's important as well, to look at the percentages, maybe not necessarily just focusing on the profits all the time, And then with the risk reward, you've mentioned there the 1 to 5, would that be something that you'd aim for a lot? Is it 1 to 2, 1 to 3s?
I used to aim for the I'm trying to not be as aggressive now, but before I was smashing like 10% in a trade, 10% in a trade. It's not sustainable at all. It feels amazing when you're doing it, like for the 2-stage evaluations and live, like smash 10, 10, 10, but it's just not sustainable. I'm really focusing on my consistency now. But I was trying to play about with risk to reward, seeing what worked for me. I like 1 to 3, 1 to 5, but I just read Best Loser Wins, and he was saying that you're limiting yourself by setting the risk to reward on your trades. Like, how are you expecting to compound your account if you don't allow your winners to run? So I'm trying to focus more now on just reading market structure and where would be the best place to set my TP over a set risk to reward.
Yeah. Interesting. I kind of do the same myself, actually, because there's no point aiming for a 1 to 2 if the next,
it's going to run for 1 to 20.
or even maybe 1 to 5, whatever, which is, I think it's important. And I suppose with your emotional diary and trading diary, shall we say, I presume back testing and forward testing is something that's really been imperative for your development over the last, let's say, 12 months, 18 months in particular, I guess.
Yeah, so I use FX Replay as a back testing tool. Basically, it looks like TradingView, except you're able to place trades on like a demo, like simulated account. It's really good. That's what I'm using at the minute to try and brainwash myself into seeing, like, if you risk 0.5% per trade, you can compound an account. Like, you don't need to constantly like risk like 1% or a plus. So I'm using that at the minute to show how consistent risk it pays off in the long term. So that's mostly what I'm using that for at the moment. But I'm a big fan of forward testing, because it's all good and well looking back in the charts and be like, oh, that played out perfectly there. But when you're in the live market and then your emotions are involved, you're going to see things differently. So I like forward testing. I will go into a journal, I might like a template I've made on Google Docs, and I'll record what I see in the market, what I visualize, what I want price to do. And then I will record why I've entered the trade, my thoughts and emotions whilst I'm in the trade, and then what happened after, and then where the market went at the end of the day. So that's kind of my method of forward testing, is like just journaling before, throughout, and after.
Interesting.
And seeing what works.
I suppose it's realistic, because the decisions you make in the live markets is relevant, obviously, how you're feeling in terms of the price action. Is it slowing down? Is it continuing to move higher? Regardless of what is obviously developing in the price action, you're able to get a realistic, conclusive answer as to how you're reacting when those conditions arise. And I think that's probably going to be really good in terms of any sort of development, regardless who the individual is.
I think as well, when you're forward testing, it helps you to like put it into your long-term memory more, because you're so invested in this trade's playing out. And if you're noticing a pattern, like maybe, I don't know, like pre-London, like that's where the volatility is, like stuff like that, or price always comes down and takes out the open before it heads up. When you're noticing these patterns whilst you're in a live trade, you're going to remember them more, because you're so like focused in on it.
Yeah.
So it helps me to, yeah.
And then when you see them so often as well, so when you repeat the process 100 times over, 200 times over, you then you understand the price actions. Then it's just a case of, well, can I maintain that mental edge that you've kind of mentioned at the beginning? And then once you have your mental edge, the price action's either going to do what it's going to do. So whether it wins or whether the trade loses, at the end of the day, you can't determine. You can only just put your best observation on board, and then obviously make decisions off the back of that. And
it helps you to trust your setup as well. When you're noticing these patterns and you take it into consideration, it helps you put trust and hold in your setup for longer.
Yeah, definitely. And then I suppose with your execution, right? So you've obviously got the trade plan at the beginning, and then you have your management process, and then you do the journaling at the end, and then you evaluate your results. Within your, I suppose, strategy, obviously we talked about journaling. Do you scale in? Do you add in multiple positions, or are you the type of person saying, well, I've got a piece of analysis here, I'm looking at gold, I'm going to place one buy on gold and I'm going to leave it at that? Or would you be the type of person where I'm going to maybe break down my risk a little bit and add in multiple positions, determining upon how the price action's reacting at a specific level, or at a fair value gap, or an order block, or something like that?
Yeah, so this is something I'm trying to do as well. Same again, that book, Best Loser Wins, like there's some nuggets in there, but he says about adding scaling in on a winning position is against our human nature. Like I find myself doing this, I'm sure a lot of people have as well, is they scale in, they add the losing positions to try and like mitigate their loss. So I have found myself doing that, where like price, I'm like, right, price is definitely going to jump from this POY, and then it takes a bit of liquidity to the left. It's like, oh, I didn't see that. It's just a sweep. It's definitely going to go up now. I'll add in another position, and next thing you know, you're over leveraged in a losing position, and the market's going against you. So at the minute, now moving forward, I'm trying to wait until my first position it's break even. I've moved stop loss into profit, because price is broke. Like if I'm in a buy, it's broke the high that pushed price into my entry. So expectational order flow is telling me that it's going to move higher. Okay. Wait for a pullback and then add in a winning position. So I'm trying to like, you know, the way the market breaks, and trying to like scale in that way. Instead of closing out the profits and be like, you're scared that the profit's going to turn into a loss, I'm trying to scale in on the win, let the market run, and add in as well. So
interesting. And that, again, that's psychology and human nature, really. It's because it's when you start to see the P&L dwindle or go less, then it's defensive mode, really, isn't it?
Yeah, I'm trying to fight that.
For sure. And in terms of the journaling, I know we mentioned it briefly. Do you journal? Do you, like, in terms of journaling, I know it's obviously that's across the board, it's every trade. Do you review your trade in a block of 5, a block of 10, or is it solely at the end of the day? How does your journaling process actually work for you?
Yes, so whenever I started taking journaling seriously, what I done was I decided, right, I'm going to do 90 trades on a demo account, split it into 10 phases. 9 phases, so 10 trades per phase. Once I've done that, print it all out, literally get a red pen, because by the time I'd finished those 10 trades, I was doing a lot of studying, so I'd improved it. So I was basically going in with a red pen like a teacher. I was like, no, this is wrong, you should have done this, like just correcting myself. And I've got like a full folder of this. That really helped me. I don't need to do that as much now because I'm just trying to find patterns. But yeah, sorry, what was the question? I went off on one there.
Yeah, kind of. Do you journal after every trade now?
That was it. Yeah, so now I do a mix of manual journaling using my template on Google Docs. I'm also I like Swift Journal, it's automated.
Okay.
But I personally like having it all in one place. So it's automated journaling is really good because sometimes I will, if it's a win, I'll not bother journaling. Journaling for me is a bit like praying. You only pray when you need help. So I only go to journaling whenever I need help. Do you know what I mean? So if I'm on a winning streak, it's like, oh, I'm invincible, ego's boosted. There's no need for improvement. But when I'm on a losing streak, it's like, what am I doing wrong?
Yeah.
So I'm trying to do it more regularly and do end of day markups. So basically where the market went after I closed my position to show myself like how much opportunity there actually was in that move and to help me to hold them for longer. So but Sundays is the day I like doing my back testing and going over my journaling and trying to like
find the process.
Yeah, so usually the weekends. Yeah.
And I suppose it's very difficult because I suppose with any scenario or any setup or any trade, it'll move, let's say, from A to Z, but the likelihood of catching all of the move is next to impossible, really, isn't it? Like you might only be able to catch like E to F or E to J or E to N, and then you're trying to figure out, well, why couldn't I take more of the position, or how do I make myself more efficient that I can maximize returns even more beyond that?
That's the thing with back testing as well. This is why I prefer forward testing, is because when you're measuring those full moves, you're setting an unrealistic expectation that you're going to catch the full move, when 9 times out of 10 you're not going to be able to capitalize on the full flip.
For sure. And I suppose as well, it's then a case of, well, when you talked about there the 10 sets and 9, or the 10 sets of 9, the 9 sets of 10, I mean, you can then evaluate your journey, your strategy, and how things have maybe changed. So let's say after 3 months, after 6 months, after 12 months, 2 years, you can then evaluate how the journey is developed, but how your strategy has changed, how the precision, the effectiveness and the efficiency is obviously improved as well in the background. I presume that's something you focus on highly as well.
Yeah, so that's why I have that folder under my bed, because sometimes when I feel like, oh, I don't know what I'm doing, or I'm never going to figure this out, I like going back through my old journals and looking at like even my very first trading plan, like it was trash, like looking at it the other day. But it makes me feel like, right, if I go over that, I can get over this. Like, look how far I've came already. Imagine where I'll be in a year from now. And that keeps me, because you don't really see the progress you make day by day. It's only when you look back. Do you know what I mean? So I I've got everything. I've kept everything. Even the post-it notes that I've stuck to my monitor years ago, they're all in a folder. Like I kept everything.
Yeah. It's just refinements, really, isn't it? And trying to that extra 5%, those extra 5%, 3%, 1% across the whole strategy over time really does add up. It's the compounding effect, really, isn't it?
Yeah, definitely.
For sure. And I suppose with your background, everything that's you've seen, the different market cycles, the different strategies, the cherry picking of these like nuggets of information, like for example from the recent books you're reading, how would you define a good trader? What do you think a good trader needs to have today if you were to speak to someone new?
Yeah, so like a successful trader who's established themselves, is that what you mean?
Yeah. If you were to talk to someone, let's say now.
So basically my goals right now, what I want to be, right? So it's disciplined outside of the charts, not just on the charts. So someone who's, waking up before the markets, they're not just jumping on the charts to try and like get a gambling fix from trading. They're actually focused on their mindset, meditation, breath work, moving their body, exercising. Oh, sorry, someone's trying to ring me there.
No worries.
Sent in the voicemail, don't worry. Yeah, so just discipline all around, because like how you do anything is how you do everything. So discipline outside of the charts. Also consistent risk management, minimizing the risk, understanding that it's not about how much profits they make, it's how much you can preserve your capital, long-term vision kind of thing. Also maybe a bit non-trading related, but they don't view people in the same league as them as competition, but more someone that they can work with and learn from. And yeah, always remain a student, open-minded, always willing to learn, not perfect balance between humble and confident, open-minded, but also not too cocky.
Yeah. I think when you get too cocky, I think you get humbled very quickly, don't you?
Yeah, especially on Twitter, like everyone's savage over there.
Yeah. Just
Everyone speaks their mind. It's great.
yeah. But put them back in the box relatively quickly.
Yeah.
Yeah, for sure, for sure. And then in terms of your own development, right? So I know you can obviously have objectives outside of development, like in terms of career. But if you were to look at your own trading plan, what would be the points that you're looking to really refine, really develop yourself internally over the next, let's say, 6 months, 12 months? Have you certain things in mind that you're even looking at yourself now?
Do you mean to like revamp it?
Even improve it, enhance its
Yeah.
efficiency even further?
Yeah. So I want to try and focus more on the 4 hour, take less trades, waiting for higher quality setups, and then holding them for longer. Because it's just I've had days when I've been scalping and it's really well, like you're catching buys to sales, you're really milking the market. Like I've had good days with that, good payouts from doing that, but it's mentally exhausting and you're wasting your whole day. Like, you know, you can't do anything else because you're active on the charts. I want to be able to enter a trade, like wait, set an alert and not have to stare at the charts. Because when I stare at the charts too long, I start entering trades that I shouldn't. So I want to just be on the 4 hour, set alerts, wait for price to come to me, and then hold it. And then obviously consistent risk is something that I need to stop risking depending on how I feel about a trade and actually just risk consistently. Because if I'm like, oh, this is a good one, bet the house. Do you know what I mean? It's just not going to work long term.
Yeah,
So
certainly. And it doesn't matter then. So regardless, you're following a process. If the trade wins, you get X back. But if it loses, you're not putting more of an emphasis on one trade winning than another, I
yeah,
guess. Okay. Interesting. Good
yeah.
comments there. Good comments. And I suppose, right, you're talking about your trading plan there. In terms of your progression, your outside of, let's say, trading, have you any goals and objectives set, let's say, for this year, next year, 5 years time? Do you set goals and objectives for yourself?
Yeah, I'm trying to find more consistency in the gym now as well. I'm finally like seeing I'm just fighting that you know the wee voice in your head. It's like, oh, you're too busy today, go
Yeah.
tomorrow. So I'm fighting that now and I'm going more often and I'm not doing like PT or classes or anything anymore. I'm doing it on my own so that I can really focus on, you know, fighting that voice that's telling me I'll give up, you've done enough. I'm trying to build discipline in the gym so that I can build it on the charts. I'm trying to focus on improving these areas outside of my life so that when it comes to me sitting down in front of the charts, I'm not just going full savage on it. And
Yeah. So
emotional brain's taking over me.
yeah, so the discipline is unilateral across your whole life rather than just
Yeah.
okay, interesting.
I put an espresso machine beside my bed so I can start getting up earlier because I'm like half asleep hitting the button, getting the espresso going to try and get me out of bed earlier. So I'm really trying to like,
For sure.
sort my life out.
Absolutely. And I suppose with everything, you've got your systems there, you've got your process, you've got your magic keys to handle your risk. Trying to build those positive habits, the emotional diary, the trading diary. It's that, I suppose, from your perspective, it's just trying to find the happy medium, really, isn't it? It's about combining all of these different aspects and really trying to enhance and develop your trading plan, bring it on to the next level, I guess.
Yeah, just definitely less trades. I think the more times I enter the market, the more chance you're giving it a chance to take back your profit. So less trades, higher quality, and more discipline. And then I'm good to go.
Good to go is right. Absolutely. Well, thank you very much. This has been a great call today. It's been really insightful because we don't get too many female traders.
I'm Northern Irish. It's so nice to speak to someone with the same accent.
Exactly. And the thing is as well, it's trying to break down that stigma as well and bring more people in, regardless of the backgrounds as well. So great to have you on board today. So I definitely love to have you on board again. Absolutely, in the future. Always more than willing, and good to see how you progress, whether it's with us or whether it's with other prop firms as well. That kind of development, continuous improvement, it's all something we try to strive for. So best of luck with everything, my dear. Thank you very much for joining us today.
Yeah, enjoy the rest of your day. Thank you so much.